Lance Roberts here with 3 minutes on markets and money. Technically speaking, Tuesday, will the markets retest lows this summer? That's really the question everybody wants to know, because either the markets are expected to just go higher from here and the bear market's over. The other side of the argument, of course, is that, well, you can't have this big of a reflexive rally without having a retest of lows. Look, here's the reality of this. It doesn't matter. Whatever it turns out to be is what it will turn out to be. We've got lots of Fed liquidity coming in, supporting asset prices, but we've got terrible economic data coming that certainly is going to weigh on earnings and outlooks, and earnings estimates still way too high at this point. We have to bring those earnings estimates down. Valuations currently where the markets are trading are at some of the highest levels historically speaking. So again, somewhere in this balance, things are going to work out, and whether that means markets retest lows or not isn't really relevant. What is relevant is where is the right opportunity to put more money to work in the markets. That's what we want to know as investors and manage our risk accordingly. We've had a very nice rally from these lows, and of course, the markets did come down yesterday and retest and hold support at this 50% retracement. But again, we're starting this process of kind of being in this topping and consolidation pattern that we've now been in for the last couple of weeks. Market has just traded sideways here, really trying to consolidate this recent gain from the lows. Now, that's a bullish sign, by the way, that markets could be consolidating this gain here for another potential leg higher as we move into the summer. That's one interpretation. The other interpretation is that we are in the process of starting to form a head and shoulders pattern here that could continue here for the next week or so as we move further into the month of May. The economic and earnings data is going to be dramatically bad over the course of this period as we see, a deep plunge in GDP, record drops in employment. Earnings are going to be declining, more negative earnings reports coming out of company, bankruptcies are going to rise. There's lots of bad economic data coming down the road, which kind of suggests that this topping process we may be in currently could lead to a retest of support at some lower level. Logical levels, of course, of the 38.2% retracement on the Fibonacci scale coming off that low, and of course 25% below that. But the lows are certainly a realistic possibility of a retest sometime this summer as the markets begin to try to align valuations, earnings, and economic growth. So we're certainly not out of the woods at this point in terms of managing risk in portfolios. And really for us as investors, that's really all that matters, right? We've got money at risk here, and just hoping that prices are only going to move higher because of the Federal Reserve or whatever excuse you want to use is certainly optimistic, and there's nothing wrong with that. But risk is about managing the potential for loss of capital. So this is why we remain, very cautious about how we're managing money currently. As we've been adding exposure on this rally, we've matched that increase in exposure on this rally with offsetting hedges, either in gold or fixed income, or even just holding some extra cash, but matching each step higher in terms of our equity risk with an offsetting hedge to manage the volatility of the portfolio. Another important aspect of this is that while we're in this process currently, the market does remain on a sell signal currently, and money flows are weakening. In fact, if we take a look at what's been happening with the volume of the market, as we've had this rally, we've had lower volume trading in the markets on a regular basis. So this doesn't show that there's a tremendous amount of conviction to this rally currently, and does suggest that sometime this summer we could very well see a retest of lower levels in the market. Now, that doesn't necessarily mean we retest the ultimate lows, but it certainly suggests that we could have a healthy pullback of 10 to 15%. That would certainly be concerning for many investors who have just really kind of started to see their portfolios starting to pick up some steam. So again, monitor, measure the risk. This is why we remain cautious right now. We're moving into the 3 weakest months of the year, and there's a lot of unknown data that's coming down the pike that we simply just don't have any real concept or structure of understanding what the impacts longer term to earnings are going to be. This is 3 minutes on markets and money. I'm your host, Lance Roberts, and be sure you get by the website today, realinvestmentadvice.com, and read our latest article. It's called, Will the Markets Retest Lows This Summer? That's the question everybody wants to know, of course. We've got all the data there for you, along with all of our other blog posts, our newsletter, podcasts, and more. realinvestmentadvice.com. We'll see you next time.